You do not want to miss this episode. Anyone that has group insurance or employers that have group insurance or are thinking about group insurance, we're going to dig into it today with our resident expert, Pat McIver. We're going to talk about Ozempic, some other high costs, the new pharmacare program. How does this affect you as an employer and as an employee? Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing today?
Hey, Darren. I am doing great. I'm excited to have Pat on for this episode. Before we dig into it, though, I am going to remind everybody, if you're listening on your favorite podcast platform, please make sure you subscribe and leave that 5-star review. And don't forget to follow us on social media at Control and Compound on Instagram and TikTok. And for you YouTubers out there, please make sure you subscribe and hit that bell button so you always know when new content's coming out.
Okay, so today we've got our group expert, Control and Compound. We partner with Pat McIver. We had a lot of employers out there asking us to help with their group insurance. So we thought it'd be a great idea to bring Pat in today. Great friend of Control and Compound. Pat, how you doing today?
Great. Thank you so much for having me. It's an honor to be here.
All right. Well, listen, we're looking forward to picking your brain. So, Pat, I've known you a long time. I've known your father a long time. Give us your 30-second bio here. How'd you end up at group insurance? What'd you do after high school?
So after high school, I went to Acadia University and played basketball there. And that was, unfortunately, at the time, my primary focus while I was there. And then right out of university, I got started with my father, who owns his own insurance company and provides group benefits to employers, right? So I got started right out of university in the group world, and 15 years later, this time is flying by.
That's awesome. Well, we love working with you, and let's dig into it, Christina. Where do you want to start?
I'm thinking we should start with the basics of group insurance. So, why would an employer want to look at adding group benefits to their plan for their employees? Some of these big changes that we talked about. Let's go back to the basics. Start from the beginning. What are group benefits?
Group benefits is an insurance offering from an employer. This is made up of several core components of benefits. So life insurance, accidental death and dismemberment, dependent life, critical illness, long-term disability, short-term disability, health, and dental. So if you don't have to have all those benefits, but typically a minimum of 3 of those benefits make up a core component of a group offering.
Okay.
So what's a typical group benefits plan? What do you see out there? The big 4?
Yes, definitely. So typically, smaller employers, health and dental is the main focus. Larger employers, life insurance, disability, health, dental, accidental death and dismemberment always is a part of a group plan too.
A couple cents just thrown on.
Yeah, exactly.
And do you see many employers offering short-term disability, or is there other things that can cover that?
Short-term disability is kind of the least common benefit that I would see. It's the most expensive benefit, as it's a rate per 10. It's not typically offered in small to medium and even large size businesses.
Right. So they'd be covered under that EI program, the disability under the EI for the first 4 months or something like that, is it?
Yes, exactly. Yeah, sick days, EI, and then traditionally a long-term disability plan would have a 120-day waiting period. And if the client is eligible for long-term disability, they would roll into long-term disability after 4 months.
Okay. And then what about cost sharing? I know, employees always see something deducted on their pay slip for benefits. What's a typical cost sharing?
A typical cost sharing, I would say, is 50-50. And that's a good place to start. So how a group plan is administered is there's one bill that goes in each month. So the employer pays the entire bill, and then the rest of the deductions are administered through payroll deduction. So a typical cost share is 50-50, but it varies, right? Some employers pay all the benefits, and sometimes it's 50-50.
Is 50-50 the minimum, or is there a minimum that they have to be, as an employer, that you should be or have to be paying? I know there's some rules around group benefits that you have to follow to make sure that you're including everybody and you do it fair, right?
Yes. Typically 25% is the minimum from an employer standpoint.
Okay.
Insurance, depending on the size of the group, right? If it's a smaller group, they typically want to see at least 50% of the premium coming from
the employer. Okay,
Yeah.
Gotcha.
Yeah.
Okay. And then what about tax benefits? Because I know a lot of employers look at group benefits as a great tax efficient way to compensate employees. So can you talk from an employer standpoint why group benefits make sense, and then from an employee standpoint, what are the tax benefits?
Yeah. So any benefit that the employer pays, the portion that the employer pays is a business expense to the employer. So if the employer pays the whole entire benefit plan, then that's a business expense for the employer. If it's a 50-50 cost share, then 50% of that premium is able to be written off for the employer. And then the portions that were paid by the employee, they can claim that against their taxes for the health and dental. So we don't have to get into specifics of each benefit, how it's sort of calculated, but if it's health and dental, the employee can claim that on their taxes.
If it's over a certain amount, and
yeah, they might not get anything, but
Yeah,
they can
exactly.
give it a try, right?
And so I know employers look at this and go, it's great because if I give an employee a raise, I'm going to have all those payroll taxes, EI and CPP and all that. And then if I provide group benefits, do I have those payroll taxes?
So no, as an employer, it does not go through payroll taxes.
Very
Which
cool.
is great for a business owner, right? They're
Yes.
able to expense that, offer a benefit to their employees, like employees happy, employers happy. It sounds like a pretty good thing.
Exactly. And then if an employee makes a claim on their plan, then that's a tax-free benefit essentially that they're receiving, right? They're not going to pay tax on that health and dental claim that they, get reimbursed for.
Yeah, I think it's more and more important with employee retention, right? You have to do something for your employees. It's a great way to do it.
Yes, that would be the main reason why you would put in a group benefit plan, right? Whether it's a 2-person plan or a 100-person plan, I think attracting and retaining key employees and existing employees is the reason why you do it, right? If I'm looking at a job, I'm at a current job and I have a great benefit plan, I'm not going to leave that job and go to a company that doesn't offer a benefit plan because that's so much risk for my family, right? And unfortunately, you see the other side. I see the other side at times where people are stuck, right? They get on a high-cost medication and they have to, they're not leaving that job, right? Because they don't want to run the risk of losing that health plan, going to another company, maybe the benefit plan's different, things like that.
And I just know as an employer how hard it is to find people these days.
Right.
And then you do find them, you spend all this time, money, and effort to train them. And then to see them leave because you don't offer a benefits plan, forget about the cost of the benefits plan. That's going to cost you way more in the loss of that employee or not being able to find the right employee. Cool. Okay, so we talked about the tax benefits. What else we want to dig into, Christina?
Well, you mentioned that hot buzzword Ozempic out there. I think people, you're hearing a lot of buzz with it in the celebrity world, and I think a lot of people are starting to, look at it from a weight loss side of things. And there's probably questions out there. I'm sure that there's employees and everybody using these group benefits alike that these new drugs that are popping up, are they covered? Like that's a great question to start with, right?
Exactly. Ozempic is probably, it's probably been the hottest topic medication, at least since in my career, which has been a long time now. So it is covered, but you have to be diabetic, right? So you have to be considered at least type 2 diabetic to get this medication. So it's a prior authorization drug, meaning you have to get forms filled out, doctor's approval. You can't just go down to the, over the counter and order this and get it covered by your benefit plan.
Okay, so prior authorization, let's dig into that. So, because I know employees get frustrated because it's a prescription, they get a prescription, and then they submit it, and then they don't get reimbursement. So, when would you use a prior authorization, and kind of what are the steps you'd go through?
Yeah, so prior auth it's just a little bit more of a detailed process than your doctor just writing you a prescription. It's a form that your doctor would fill out, but then it sends to the insurance company. Then it's depending on if it gets approved or not, right?
Okay.
And then there could be some back and forth between the doctor and the insurance company to see if it's. So the issue with Ozempic was it's very popular and it's creating a lot of buzz. So they had to kind of put some rules and regulations on it because it'll just get abused by benefit plans, right?
Yeah.
And then which would drive the claims experience higher and cause problems for employers.
And Ozempic gets all the fanfare because we all hear about all the celebrities and stuff, but there's a ton of higher priced drugs in the last number of years. Can you talk about what what effect that have, and like what are some of those classes of drugs that we see that are driving up benefits costs?
Yes, exactly. Over the last 10 years, the biggest issue in my business and group benefits as a whole are the introduction of biologic medications. So biologics are typically very, very expensive. Prior authorization, like we just said, Humira, Remicade, Enbrel. Typically, they were just used for rheumatoid arthritis. And these are miracle drugs. These are, helping people like it's incredible. But now they're used for several different conditions. So Crohn's, colitis, rheumatoid arthritis. And this is driving the cost of benefit plans because I've seen several that are north of 100. Typically, rheumatoid arthritis drugs are about $40,000 a year, right? So these are catastrophic drugs to benefit plans, the costs for employers and
insurance companies aren't in this for charity, right?
No,
so if you have employees charging a $40,000 or $100,000 a year drug, that's going to be reflected in some way on that renewal.
Exactly.
Can we bring it back a bit for those that might not have a group benefit plan already? Because we're talking about claims experience here. We're talking about drugs making it more expensive for them. How does that impact someone that set up a group benefits plan for their employers and now they've gone through a year and some of these drugs have come into play? Like maybe bring it back to the basics for those that might not. I know you two are experts here, but for us.
Yeah. Like I was kind of saying to you guys earlier, I actually like to work backwards in my process. I like to start with the renewals, believe it or not, and talk about how a renewal is going to work before I actually set up a benefit plan with an employer. Because when you set up a benefit plan with an employer, it's roses and rainbows. It's just about, are the employees actively at work? What is their age, their demographics? And then you get a price, right? You get a price based on that. There's no past history with no claims experience. So as time goes on, there's claims experience. And what claims experience is you pay a premium for health insurance, and then depending on the usage of the plan, there's claims. And that determines a break even on the plan. And typically around 70% is a common number. So for every dollar that comes into the program, the insurance company wants to see it less than 70% that goes out in claims, so they can make some money. Like we said, they're not, insurance companies, as much as we love them, they're not in this for charities type thing, right? So I think that's the most important aspect of group benefits is claims experience, the renewals, just being aware of your claims experience throughout the year, getting reports, because you got to know what's going on because it can change fast, especially with these high cost drugs.
Yeah, there's not a lot of deals in group insurance. People think they're getting a deal, and you may be able to get a deal for a year, but long term, the price you pay as an employer is going to be a reflection, especially on the health and dental, of claims.
Exactly.
So
yes, totally. And that's a good kind of segue into pooled benefits and experience rated. The life insurance disability, that will always be based on your demographics, right? So if you hire 10 64-year-olds, your life insurance and your LTD is going to be expensive, right? But if you hire 10 24-year-olds, that's going to be a lot less expensive for those benefits. Whereas the health and dental, it's pretty much based on your usage of the plan, right?
So pooled, we're talking about if you have an employee, unfortunately die, that's not going to drive up your life insurance rates on your benefits plan because that is pooled with all the different employers out there, all the insurance companies experience. But if you have high health and dental claims every year, that's definitely going to drive up because those are experience rated. Is that right?
Correct. Exactly. When I see an LTD claim or a life claim on a renewal, it just blows your mind that you see $100,000 or $200,000 show up on a spreadsheet and the rates go up 2%. You're just thinking, wow, if that was health and dental, the plan, the plan would go through the roof and you'd be talking about maybe canceling the plan because it's too expensive or something like that, right? So, and that just is getting back to it's a pooled benefit, right?
Yeah, it's a tough thing for an employer because, employees, you want to cover this drug for the employee sometimes. But the reality is, if one or two employees keep having these high claims, the price is going to get prohibitive. So the employer won't be able to offer it to any of the employees, or even the employees that aren't using these expensive drugs. Their 50% cost sharing is going to get to a point where the plan can blow up.
Exactly. Yeah, and I've seen it. I deal with it on an annual basis, and it is extremely difficult to deal with. Right. That's why almost every new plan that I set up under 5 lives, smaller, really small plans, I put a drug maximums on there, 5,000, maximum of 10, because employers can't afford to have unlimited drug plans anymore, right? Like a lot of the plans I see are capped drug plans now. And 10 years ago, if I was sitting here, I'd be saying the complete opposite. It wasn't that case. Just because of those biologics.
So you mentioned 5. I mean, obviously you can go up to hundreds of employees. What's the smallest number of employees we can start? Because I know, Christina, we know a lot of business owners where they maybe have a pre-existing condition and they don't have a benefits plan, or they have a child or a spouse with a health condition. So how big of a group do you need to start a benefits plan?
You can actually start one with a minimum of 2 people. It's tough. I'm not going to lie. It's a challenge because we just kind of got back to that claims experience, right? Like if you have 2 people paying in, that's not a lot of premium coming in, right? So you basically can't use the thing to have it sustainable, right? But it's there are no pre-existing conditions in group benefits, right? So it's more different than individual insurance. It's more, are you actively at work? Are you meeting the requirements of the plan? And your pre-existing conditions are covered. There's no medical evidence, which is the greatest thing about group benefits.
Okay, so I got a high level question for you here. What typically do you see? So you're an employer. You've got 100 employees, and you have an employee that's 25 years old, and fortunately, go on disability, and they're going to be on disability for the next 40 years. What's sort of the best practices from an employer standpoint on how long is that person going to continue to be on your health and dental plan? Like, so as an employer, are you going to go, okay, this person's not going to work for me for the next 40 years, but I'm going to cover them for a drug plan for the next 40? Like, what's best practices from an employer standpoint? Because again, I talk about protecting the employer all the time, but really it could be protecting all the employees.
Yes.
Because of that high claim cost. And again, we'd love to cover everything for everybody, and give everyone $1 million bonus every year. But as business owners, we got to protect the overall costs.
Right. That's a great question. It's kind of decided by the employer. It should be decided at the beginning, right? But it never is, right? I always have this conversation with people once an LTD claim hits, right? It's almost like you start talking about the bad stuff once it actually happens, right? But if companies would kind of have those sort of handbooks built in, that'd be really good, right? I think 2 years is the standard.
Yeah.
But once again, really tough conversation to have with an employee. And if you say they're cut, who knows what you can bring in with regards to them getting upset and wanting to talk to a lawyer. If you just say, hey, by the way, we're cutting you off.
Yeah, I think it's a great company policy is to have that set up in the employee handbook to say, if you become disabled, we'll cover your health and dental plan for 2 years. At that point, you're on your own. Yeah. Because to your point, it's pretty hard. It's a lot harder after the fact to implement that than it is before the fact.
Yes.
And that's huge.
Because that goes hand in hand with a thing that I spend a lot of time on, and that's enrollment, right? So ideally, depending on the size of the group, it's mandatory. If it's a 10-person group, 100% participation is mandatory unless you have spousal coverage through your husband or your wife, right? So you cannot waive the health and dental. You have to join the plan. But it's amazing how many people either fall through the cracks or just refuse benefits. They decide that they don't want to pay for it. They view it as something coming off their paycheck instead of it being the complete opposite, which is if you get sick, you actually are saving a lot of money in the run of a year.
Yeah,
right?
I can't, unfortunately, I can't tell you how many people I've heard complain about the costs of their benefits plan because I'm not using it, I'm not claiming, and then 5 or 10 years later, those are the people that need it the most.
Exactly.
Because something happens, right?
Right.
Everyone doesn't use it until they do.
Yeah,
exactly. And once they start using it. Okay, Pat, what about like self-employed people or any business owner, I guess? We're talking about the group insurance, but really if you're a business owner, you definitely should be looking at a health spending account as well. How does a health spending account go with a group insurance plan? And kind of break down what a health spending account is for a business owner.
Sure. Yeah, I think a health spending account is a great addition to a benefit plan. We've actually seen kind of over the years more popularity in health spending accounts due to the rising costs of benefit plans. But the issue with the health spending account is you're not providing unlimited coverage or a certain amount of coverage other than the amount of money you give to that person. So a health spending account, you allocate each employee, let's say $1,000 a year. They can use that for eligible health expenses that aren't covered under the plan. So at a high level, the employee pays the expense, let's call it a dental cleaning. They pay it out of pocket. It goes through their health spending account. The employer pays the expense, and then the employee gets reimbursed, for that eligible health expense. So, in my opinion, it's a great add-on to a benefit plan because it's, well, of course, it's a great thing because it provides you extra benefits for your stuff that's not covered under your plan, because everything's not covered under a plan, right? Like a benefit plan has to be a one size fits all. Right? It can't just be, Christina gets the best benefits and Darren gets the best benefits and this person over here doesn't get the best benefits. It doesn't usually work like that unless you're a really large employer with a flex style plan, but those are not super common.
Okay. And then, but back to the employer. So if I'm the business owner, so could I have for senior management, say $5,000 or $10,000 of health spending account, and then for the regular employees, 1,000? Like, can you separate that amount?
Definitely, yeah. Health spending account can be flexible, right? You can definitely have management with more, and then employees with less, or different classes of employees. And a benefit plan can have different classes too, right? Like I do have multiple plans that have one or two different classes, right? It doesn't usually get into 4 or 5 different classes or anything like that, but management might have better benefits and regular employees might have still great benefits, but just not quite at that level.
Yeah. Like, I was just going to say, if you go back, Christina, we did actually an episode on health spending accounts, and I told the story how I was lucky enough, my kids both decided to get braces the same year.
Right.
So it was about a $10,000 expense. And, that would have cost me really $20,000 of company money by the time I paid it out to myself and paid 50% tax and went and paid that $10,000 bill. And I literally just threw it through my health spending account. Cost my company $10,000 plus I think $1,000 admin fee, 10%.
Yep.
And so for $11,000 of company money, I covered those expenses. And was reimbursed tax free versus $20,000. So if you're and what I love about health spending accounts from an employer's perspective, if let's say you just set it up on the employer or the owner, the senior management class, it doesn't cost anything unless you actually have a claim.
Exactly.
Yeah.
Very cool.
Yeah.
Yeah, I'm not a group benefit specialist, but I know when to save tax. And if you are a corporate business owner, you should absolutely have a healthcare spending account, right?
Yeah,
you don't want to pay for medical expenses personally if you don't have to. So the group benefits fall in there too, but the healthcare spending account as well. So I think that's a great tip, which kind of leads me into my next question on tips. I know we've got a lot of listeners that are business owners and are probably following along. What kind of tips could you share with them that could, what should they avoid as an employer when it comes to choosing their group benefits plan? What should they be looking at? Any tips that you want to share?
Yeah, I think one of the biggest tips for an existing benefit plan is just to make sure that the LTD premium is paid by the employee. So if you have a benefit plan with a contract set up as a non-taxable LTD plan, which I would say 99% of the plans are typically set up that way, you should always have your employee paying the LTD premium. So when it comes off their payroll, each benefit is actually done kind of separately on a bill. If your employee pays that premium, if they were to ever go off on claim, they receive that benefit tax-free. Whereas if the employer pays that premium, they receive the benefit taxable. After having a lot of people off on LTD over the years, that's a huge difference. As you guys know, as tax experts, that's a big deal because in LTD, you're only getting 2/3 of your previous salary anyway, best case scenario, right? So no one's getting rich off of being off on long-term disability, right? So that would be one of the biggest tips and kind of the fundamental thing that gets set up at the start of a benefit plan. But I can't tell you how many times that gets messed up in the shuffle of payroll and just you find out later that the company's not paying it that way. And if an employee ever goes off on claim and the insurance company finds out that, or the government finds that out, it's taxable as opposed to
20 years of $50,000 taxable versus tax-free is a big deal.
It's a big deal.
Yeah.
It's a big deal.
So important to work with someone that knows what they're doing, right? Because those are the little things that get missed when you're not.
Yeah, because the other way around that too is you can add the benefit. If the employer is paying that premium, you can add the benefit back as a taxable benefit upon tax time too. So submit them a T4A and they submit it against their taxable income. So that would effectively make it a taxable.
That's a great tip. Any other tips?
Yes. So if you're starting a benefit plan, it's best to not have the most Cadillac benefits off the get-go, right? So you can always add benefits as you go. But if you start out with benefits that are too rich, such as, physio, chiro, massage, all at $1,000 per person per year, those are really popular benefits. They will get utilized by the employee, and that may affect your costs down the road, right? So you can think about just starting off small with a little bit more reasonable benefits. And then as time goes, see how the benefit plan works out. Get a couple renewals under your belt and see how it goes with regards to cost.
Love it. Yep. Pat, I love the fact that you specialize in group insurance. At Control and Compound, we're always talking about we're specialists in infinite banking, cash value, life insurance. And, we always say, you get these guys with 17 things on their back of their card saying, I can do this, 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 and this. Oh, I can do infinite banking for you too. And I don't really... Well, I know they're not experts at it. So I think, when you're talking about infinite banking, cash value, life insurance, you should be dealing with a firm that specializes it. And when you're talking about group insurance, I think you definitely should be dealing with someone that specializes in that. And that's why we've got Pat here today to answer questions, because he is an expert. He does it inside and out. Christina, anything else we want to mention before we wrap up here?
Yeah, if you do want to speak to Pat, or if anybody wants to reach out, learn more about group benefits, definitely reach out to Control and Compound. We can get you introduced to Pat, and you can reach out. I'm sure you'd be happy to answer any questions for anybody that they've been listening today. They want to learn more, so reach out to us. We can definitely get you in touch.
All right, thanks, Pat, group expert. Thanks, Christina. Thanks for watching. Thanks for listening. Have a great day. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.